Good morning. This is Larry McMillan with a stock market update on Tuesday, June 20th. I hope you had a good 3-day weekend. So, the market is trading off a little bit today, and typically the week after June expiration, which is last Friday, is a negative week for the market. Seasonally, it just sort of works out that way. This year, that does coincide with some overbought conditions, and the market might be a little bit tired anyways. So we are playing the short-term negativity for this week. Overall, though, the SPX chart is still quite bullish, and 1 week is not going to change that, probably. The breakout over 4,300, which started to occur on June 9th, I believe, has certainly continued strongly. And we've reached, an overbought condition in the case that the SPX is above its +4 standard deviation modified Bollinger Band, which is just fancy language for saying it's overbought, and potentially sets up a sell signal, but that might take some time, and it doesn't necessarily guarantee a sell signal. So we're keeping an eye on that. Meanwhile, there should be support at both 4,300 and 4,200 as far as the index itself is concerned. Equity-only put-call ratios are still on buy signals, although they have plunged deeply on their charts, and they're back now to levels last seen in about April of 2022, where some sell signals were generated. But past levels of sell signals are not current levels of sell signals, so we are waiting until these ratios roll over and begin to rise. Otherwise, they will still be on buy signals. So right now they're overbought, but not on sell signals. Breadth has been a little bit flaky, as has been the case really for quite some time. We're seeing negative breadth today, so we're probably setting up potential sell signals from the breadth oscillators. We have not been trading these recently just because there have been so many whipsaws with this indicator. A more steady indicator is new highs versus new lows, and new highs continue to dominate. Now, on Friday, when the market rallied strongly in the morning, there were a lot of stocks making new highs, and that holds for the day, of course. So this indicator remains bullish. VIX, on the other hand, is now getting into very overbought territory as well. It's dropped below 14, and while I understand that it has been much lower than that in the past, that usually is a case where the SPX is at new all-time highs, which is not the case right now. So VIX is showing a little bit of stress, but really until it rises 3 points in a short-term period, which we call spiking mode, until it returns to spiking mode, there's not a problem with VIX. You can just consider it perhaps another overbought condition. The construct of volatility derivatives, which really just refers to the term structure of the VIX futures and of the CBOE volatility indices, that slopes upwards, and so that's continuing to be bullish for stocks as well. So overall, the picture is still quite bullish, and that's why we're holding a core bullish position. We are seeing overbought conditions, and if those generate sell signals, confirm sell signals, we will trade those around the core bullish position. Meanwhile, I invite you to visit our website and take a look at our daily letters, which have been strong in their performance lately. And otherwise, have a great week trading.